Good morning, students. I hope that you have started accounting or partnership fundamentals and you have gone through the previous videos sent by me. From today, we will start with discussing very important topics of partnership fundamentals so that we can start with exercises. The meaning of partnership, I think you have gone through and it is clear to you. So we will discuss some very important points which would be kept in mind or which should be kept in mind while solving questions. So first topic is partnership deed. What is a partnership deed? Partnership deed is a written agreement among partners on the basis of which they run the partnership firm. Now what is a partnership firm? A partnership firm is a agreement among two or more partners to carry on a business run by any one of them or all or any one of them acting for all. In class 11 you have gone through the meaning of partnership. The theoretical portion, I think it is clear to you, and you know that a partnership is a form of business. So any social activity cannot be a partnership. It must be a business and the objective should be profit. So in a partnership deed, the partners decide to carry on a business with an objective of earning profit. So what is a partnership deed? A written document. It is not compulsory for having a partnership deed. A firm may or may not have a partnership deed. So if there is no partnership deed, what can happen, or what are the provisions of accounting when there is no partnership deed? We will discuss about those things. First, the first matter is sharing of profits or losses. So you can see sharing of profits or losses will be equal among partners if there is no partnership deed or nothing is mentioned in the partnership deed. That means if A and B are partners and if they don't have partnership deed, they will share the profits equally. Second is interest on capital. Interest on capital is allowed to the partners on their capital contributed. If the partners have contributed some capital, they will be allowed some interest only when it is mentioned in the partnership deed. Or if there is no partnership deed or nothing is mentioned in the partnership deed about interest on capital to be provided, partners will not get any interest on capital. So it will not be allowed. The third one is interest on drawing. Interest on drawing, that means whenever a partner draws some amount from the business for his or her personal uses, the firm can charge interest on the partner. As in case of final accounts, you have observed that in case of final accounts when we were accounting for sole proprietorship, so in case of sole proprietorship firm, the partner or the owner of the sole proprietorship firm had to pay some interest on drawing. Similarly, in case of partnership also, the partner may have to pay some interest on drawing if it is mentioned in the partnership deed. But if nothing is mentioned in the partnership deed, no interest on capital will be charged. Next one is interest on loan by a partner. Now what is this? This is the loan which is provided by a partner to the firm. It may happen that one of the partners have provided some loan to the firm for its activities and the firm has borrowed loan instead of bank from the partner only. So the partner will get some interest. So in this case, if the partnership deed allows some interest or the rate of interest is allowed in the partnership deed, that rate of interest will be applicable. Suppose the partner has provided loan to the firm at the rate of 10% per annum and he has provided a loan of rupees 1 lakh. So for 1 year the partner will get interest 1 lakh into 10%, which is rupees 10,000. But if the partner has provided loan but nothing is written about interest on loan by the partner, then also he will get some interest. At which rate? The rate will be 6% per annum. So even if nothing is mentioned in the partnership deed or there is no partnership deed, then also the partner will get rate interest at the rate of 6%, that is on 1 lakh rupees he will get 6,000 rupees for 1 year. So if he has provided for 1 year, it will be 6,000. If he has provided for 6 months, it will be 6,000 into 6 by 12, that is he will get interest of 3,000 rupees. Then remuneration to partners. Partners may get remuneration either in the form of salary or in the form of commission. If it is mentioned in the partnership deed, then only the partners will get some salary or commission. Otherwise, the partners will not get any salary or commission. Next, admission of a new partner. A new partner can be admitted in a partnership firm only when the old partners agree to it. So unless all the old partners agree to it, a new partner cannot be admitted in a partnership firm. So it is always with consent of all other partners. So these 6 points will always be kept in mind while solving numerical problems of accountancy. Now next very important topic is charge against profit and appropriation of profit. The difference between charge against profit and appropriation of profit. Now what is charge against profit? You know, while making profit and loss account, you remember we used to debit all the expenses and we used to credit all the incomes. So we are talking about expenses only because they are charged against profit. So these are the expenses which are compulsorily debited whether there is profit or loss. So if there is gross profit or gross loss, even then we debit expenses like salary, depreciation, advertisement expenses, all these things in a partnership, in a accounting or final accounts in profit and loss account. Similarly, in case of partnership firm also, this will be debited. So this is charge against profit because they are compulsory amount which are debited to a profit and loss account. Now what is appropriation? When profit is calculated in profit and loss account, this is transferred to an account called profit and loss appropriation account, and in that profit and loss appropriation account, the profit is appropriated, that is divided among the partners. So this is appropriation of profit. So we know that appropriation can be done only when there is profit. If there is no profit, appropriation of profit cannot be done. So let us go or discuss the differences. Nature. What is the nature of charge against profit? Charge against profit is deducted from gross profit to calculate net profit. So in case of expenses related to a partner, what can be a charge against profit? It is interest on loan by a partner. When a partner gets interest on loan, that will not be debited to profit and loss appropriation account, but it will be debited to profit and loss account. Similarly, rent to a partner. A partner can also provide his premises on rent to the partnership firm. So for that he will get some rent. So we cannot say that if the firm is not having profit, it will not pay rent to a partner. So even if it is a partner or the premises have been taken from an outside party, in both the cases rent is a compulsory payment and rent will be paid. So rent even to a partner is a appropriation of profit, charge against profit. It will be debited to profit and loss account. Next, appropriation of profit. It is distribution of net profit of the partners for the year. So when there is a profit or net profit in the profit and loss account, that is transferred to profit and loss appropriation account. Here you can see it is credited to profit and loss appropriation account, we will write net profit here, and then we will record the expenses or we will record the appropriations here. Next is recording. Appropriation of profit is recorded on the debit side of profit and loss appropriation account, whereas charge against profit is recorded on the debit side of profit and loss account. Next, priority, which is first or which is recorded first. Charge against profit is always recorded first or before appropriation. That means we will prepare profit and loss account first, and then only we will prepare profit and loss appropriation account. So profit and loss appropriation is done after net profit or calculating net profit. Examples: rent to a partner, which is a compulsory payment, it is paid even if there is loss. Interest on loan to a partner, to be paid even if there is a loss, so it is charge against profit. An example of appropriation: salary paid or commission paid to a partner, interest on capital paid to a partner. A transfer to general reserve, that means transfer of profit or net profit or some part of net profit to a reserve is not charge against profit, because transfer to reserve cannot be compulsorily done. It will be done only when the partners agree to do so. So this is the difference between charge against profit and appropriation of profit. Next is distribution of profit among partners. Very important topic. We will start with numericals along with this only. So profit and loss appropriation account. What is profit and loss appropriation account? Profit and loss appropriation account is account which is prepared to appropriate or distribute. Appropriation is actually distribution of profit among the partners. So in this account it is just like a profit and loss account, only the nature is nominal. That means we will debit the expenses of the firm, we will credit the incomes of the firm, but it will be prepared after profit and loss account. At first we will transfer profit from profit and loss account to the credit side. The journal entry would be profit and loss account, profit and loss appropriation account debited to profit and loss account. Now if there is interest on drawing, if the firm charges interest on drawing, it will be income for the firm, so income of the firm will be credited. So if any partner pays interest on drawing, it will be written by interest on drawing and name of the partner. Similarly, if there is another partner, we here assume there are two partners and both the partners are paying interest on drawing, they will be recorded on the credit side. Next, on the debit side, if there is any loss in the profit and loss account, that loss will be transferred to the debit side. Profit will be transferred on the credit side, loss will be transferred on the debit side. Next, interest on capital, which is an expense of the firm, it will be written on the debit side. Partner A will get some interest, partner B will get some interest, and then next is partner salary. So we will write the amount of interest and we will add both, and both the added amount will be written here. Interest or partners salaries or partners commission, if any partner is getting salary, that amount will be written here. If any partner is getting some commission, that will be written here. If there is amount or any amount transferred to reserve, that amount will also be written on the debit side of profit and loss appropriation account, and after calculating we will decide whether there is profit or loss. If total of debits are more, there is a loss, it will be written here, and if there are total of credits are more, then there is a profit, and that profit will be transferred to partners capital account or current account. So we will discuss what is partners capital account and what is current account in the next class. So A and B, we here assume A and B are two partners. The profits will be transferred to their capital or current account, and thus we will complete this profit and loss appropriation account. So let us take an example, or let us start exercise. Question number 13. You go to the book and read question number 13. You will find there are two partners A and B. The profit for the year is 80,000. The capitals of A and B are rupees 1 lakh and rupees 60,000. So, and the partners are getting interest on capital at the rate of 6% per annum. So you can calculate the interest on capital to A will be 1 lakh into 6%, that is 6,000. Interest on capital to B will be 60,000 into 6%, which is 3,600. So total of interest on capital comes to 9,600. B is getting salary of rupees 3,000 per month. So if nothing is written, we will have to assume that there are 12 months, and for 12 months the salary to be paid will be 3,000 into 12, which is 36,000. So nothing else is given in the question. It is a simple question. So after calculating, we find that total of 80,000 on credit side is more and debit side is less. So there is a profit, and this profit is amounting to 34,400. So 34,400 will be credited to partners capital account. So if nothing is written about partners having a capital or current account, we will have to assume that it is a capital account. So, and partners will get half, or equally the profits will be divided among them equally, since we have discussed the sharing of profits are equal if nothing is written. In the question, nothing is written about share of profit or sharing of profit, so it will be transferred to them equally. So each partner will get 17,200. So this is beginning of the exercise. The assignment for you will be that you go through the notes, we go through the topics of the book in T.S. Grewal, and you start solving the questions from question number 1 to 12, and out of those questions, if you have any problem, you post the queries, I will solve them. That is enough for today. Thank you.